Well, there's a very interesting headline in the Wall Street Journal. Shout out to course member Max for pointing this out. It is a headline on the Wall Street Journal, just posted 25 minutes ago, and it has something to do with something very important known as the wage price spiral. Back in January of 2022, I made very crystal clear videos that the worst thing that could happen, that could cause the deepest, darkest Paul Volcker style recession, is a wage price spiral, where wages continue rising in such a self-fulfilling manner that they drive inflation up, but inflation drives wages up higher and everything continues to cycle up, and that's when you really get screwed. Now, some people lately are like, oh, but Kevin, the UPS just got a 40% pay raise. And I'm like, have you seen my video breaking it down? No, you probably haven't. Long and short of it, they didn't get a pay raise for 4 years. That 40% pay raise is for the next 4 years. When you do a compounded annual rate of return on that, you maybe have a pay raise of somewhere around 4 to 5% per year. That's nominal for the hard work that the shipping industry has had to go through, for the amount of extra packages that they're having to deliver now thanks to post-COVID and Amazon. No duh, they deserve these pay raises. And remember, the Fed wants pay raises to be somewhere around 3%, which averages out to 2% inflation. So this idea that there's a wage price spiral just because one company is raising wages 40% is just stupid. But again, that's the stuff that goes viral on Twitter. It's just headlines. It's not real context, whatever. So, what is real context? Well, let's take a look at this. I mean, I don't know. I haven't read the article yet. Maybe it's trash. But we'll look at it here. So that's what we're going to do. We're going to look at it. Wage price spiral. Oh, wait a minute. We got Bon Jovi. Yo, Bon Jovi, I was just listening to your music the other day. Bro, good stuff, man. So Bon Jovi now works at UPS. We are cutting costs like crazy. We laid off management people this month, which is something I've never seen since the '08 recession. True. Problem. Now, here's something to know before we go into this wage price thing. First of all, what you're suggesting reiterates that there won't be a wage price spiral. Second of all, it reiterates that UPS has a lack of ability to raise costs for their packages. And that's because we just went through a freight recession. It started to flatten out. Things are getting a little bit better, but we just went through a freight recession. Very bad time for freight. Freight revenue is down like 25% year over year. However, there's a limit to how much you can actually raise prices. Well, actually, reiterating this, there's a limit to how much you can raise prices, which means you have to cut costs. So what do? You get rid of middle management. You flatten the organization, right? You keep upper management, you keep the workers. You pay the workers more because you need to keep the business going. This is true. This needs to happen. And logistic companies are going through a very, very hard time. So you're right, Bon Jovi. You're absolutely right. Does that mean we're going into an '08 recession? Maybe, maybe not. I mean, I don't think so, but yeah, I think that's a respectable comparison. Thanks, Bon Jovi. All right. Now, let's go back to living on a prayer here. Walmart cuts starting pay for some new hires. Ooh. I like how the worker is working right next to the wet floor sign, and then they have like an elderly person in the photo. I don't know. It just seems like a hazard waiting to happen here. Anyway, Walmart is paying some new store workers less than it would have 3 months ago. A sign that employers are seeking to cut labor costs as the once hot labor market for hourly staff cools. The country's largest private employer changed its wage structure for hourly workers in mid-July, according to documents reviewed by the Wall Street Journal and store workers. Under the new structure, most new hires will make the lowest possible hourly wage for that store. In the past, some new hires, such as those who collect items for online orders, would have made slightly more. That's when wages keep going up, right? Walmart's minimum hourly wage of $14 remains unchanged and varies by region, for example, starting at $17 in some stores. Existing workers don't receive pay cuts. Walmart said the change in pay structure allows workers to move between work groups such as food, register, stocking, digital fulfillment without pay impacts. Right. This will allow for better staffing. Sure, that's the explanation. This is how you're getting like the quiet layoffs, by the way, is you basically take people and you put them into jobs they won't like, so they quit, and then you can pay them less. Pretty rough. The change in pay structure allows workers, that way they quit rather than you fire them, right? The change in pay structure allows workers to do different jobs across the store, learning new skills to move up in the company. A Walmart spokesperson said, okay, Walmart increased pay for its hourly staff, including lifting its minimum wage over the past few years after the COVID pandemic. Broader U.S. jobs market is cooling. Hiring slowed this month. Unemployment went up as participation went up, more people working. Starting pay for salaried workers is also falling, especially for people who would change jobs. This has to do with the ADP reports. This is true. Walmart employs around 1.6 million U.S. workers. Keep in mind, there are about 155 million people in the labor force, maybe up to 158 now. Walmart store workers in the Northeast region typically had higher wages than the rest of the country, blah, 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 blah. Okay, whatever. So, yeah, look. Wages will go up still probably for the next couple of years, and real wages are finally catching up. But eventually, people are going to have to start providing a lot more value, otherwise they will get replaced by robots. So if you're at a job that is not building your resume, you better get a job that's building your resume. Let me give you an example of this. I get it. If you got a job and you're driving Uber for extra income, I understand. You need the extra income. But you really should be doing whatever you can to have a resume builder. Uber is not a resume builder. Stocking the shelves at Walmart is not a resume builder. Going from stocking the shelves at Walmart to being the store manager to going to district management to going to corporate, that's a resume builder. Okay? But being stuck is not a resume builder. So keep that in mind. If you're in one of these positions, I still love you, but I want to give you tough love. And that is, you need to figure out how to provide more value. Otherwise, in 10 years, you will be replaced. Robots will replace you, and you're screwed. You do not want to be screwed. Well, it depends. By what? In most cases, financially, you don't want to be screwed.
Congratulations, man. You have done so much. People love you. People look up to you.
Which I say yes, meet Kevin.
Where does this mean we are in the economic cycle? Should we be thinking about buying real estate? Should we be thinking about buying stocks? I have a background in real estate as a real estate agent, real estate broker, real estate investor, a stock market investor, and fund manager.
Why not advertise these things that you told us here?
We'll try a little advertising and see how it goes.
Always great to have you on. Kevin Paffrath there, financial analyst and YouTuber, Meet Kev.